All right, welcome. This is going to be the first official YouTube video. Um, I want to talk about. I'm just completely winging this. Just had to get this software on my computer so I can share my screen. I'm going to talk about GameStop. I'm going to talk about how I use my life insurance policy. So in about 10 years or so, I will not have to use a bank in the traditional sense anymore. People know it's infinite banking. It is real. And I'm just going to show you guys an example of how I use this. So I made a video the other day, a quick video. I didn't mean to time it this perfect. But yeah, so real quick about GameStop. I guess they're rumoring to be buying up shares or equity in eBay, I guess. Now, the way I see this company is from multiple layers, and they're all intertwined. If you just read the mainstream media, listen to the Wall Street Journal, they're just going to say GameStop's a dying retail company. So I've been following this company and this innovation for since the meme stock, the crazy short squeeze. I lost 48 grand when they turned the buy button off. I was like, it was insane. So back to GameStop. Okay, so we have the actual retail business. GameStop, brick and mortar, selling video games, whatever. So you have that layer. Now, the next layer is their balance sheet. So over all these years, they have $9 billion in cash. The company. I'm pretty sure the company's actually profitable, strictly from the interest they're earning on their cash. The next layer, their partnerships, the NFTs, the blockchain, the crypto, the tokenization side of it, the potential partnerships that they're forming. And then you have the most interesting, which is, I believe this is the most manipulated stock on the market. That you have the swap theory, which I think it's speculation based on facts, because it's hard because you really can't track all this data. If hedge funds are moving and doing things off exchange, I guess you can track it somewhat. But okay, so those are four layers. Retail side of it, they're they're actively um, they're actively innovating the actual retail side of the business. Okay, so they are innovating there. The second side is this, 9 billion in cash. Shareholders and of this company may benefit solely on how what moves they make with this cash. Now, it would probably turn out good even if they didn't even care about the retail business, in my opinion. But they're doing everything. Um, so then let's go to the swap theory. So again, this is basically how I've been trading this stock. So there's a theory where all these shorted companies are stuck in this dark pool derivatives swap cycle. So the SEC report, like they never even closed all the way back here. Like they never closed. They just bundle these things up in swaps, fancy derivatives. Honestly, it's pretty confusing to me, but it's out there. So go read it and let me know what you think. But like for the past 4 or 5 years, the theory is these swaps come due. They run the price up, roll these swaps over, and knock it back down. It's pretty. You can even look at it on the chart. It'll go on runs, come back down, go on runs, and with these runs is typically things you can track, whether there's some catalysts. So, for example, it's Ryan Cohen gets on the board. That's the original short squeeze, whatever it was. They buying Bitcoin during all that news, stock runs up, gets dumped on. Now they're buying eBay, so watch. Like now, they're taking a stake in eBay, so that's the news right now. So how I'm gonna play this personally is going into Monday. I'm gonna sell a ton of calls aggressively, and I'll roll up and out if I need to because I don't really want to sell the shares. But probabilities tell me that this, I don't know, something, for example, happened. Oh, Ryan, like they come out and say, no, we're not buying eBay. Stock drops back down. Like that's just an example of how something like that's going to happen. So with those calls that I sell, I am going to buy more shares once all this hype dies down. But so where it gets interesting, and I just made a little short video of this. So we'll do a hypothetical, but this is how I actively trade this company. So I have a dividend paying whole life policy. So let me just go to here real quick. Yeah, so I have a dividend paying whole life policy that I use to pull money from when I see opportunities, and I invest it, and it's once I explain this, it's pretty insane. All right. So for example, we're gonna say I have 100,000 in my policy. Okay. I took out 10,000 of this policy. This loan, it's a loan, so it's 6.75%. So what do we got there? 10,000 times 1.75%. What do we got? All right, so 675. 675 divided by 12. All right, so $56 a month. That's what it costs me to pull this cash out. Now, this policy, it's going to compound at 4%, guaranteed per year, not including dividends, things like that, or the tax benefits, of course. So I bought, again, just hypothetical, but so we go back here, I'm going to say 10,000, even let's say even $25. So what's that? That's 400 shares. So 400 shares, $25. Now, obviously, if you just bought that, you got lucky. There's times where I'm buying shares just for months at a time before we get a run. But again, you get the point. So let's say we can sell these shares at $30. Okay, so you make $100 a share, or $100 a share, $5 a share at 400 shares. So times 30. Yeah, so you made $2,000. So I can make, if I sell those shares. So let's say I sell the shares at 2,000. So I just made $2,000, and this cost me $56 to make. Now I don't have to pay this loan. I'm gonna pay it, but there's no strict payment schedule. If I never pay it, if I take out a loan, never pay it back, it just comes off the death benefit at the end when I die. Now, but you want to, you want to pay your loan. You want to manage. You don't want to be done with this type of product. So now I made $2,000. I can do a few things. I can pay the loan off, and then just keep the profit. Or what I do is I'm going to put this towards what they're called paid up additions. So basically like little mini fully paid up policies, but it just goes mainly to the cash value. So I'm going to put, I'll say, knock 3 months of interest off the loan, and then I'm putting the rest towards cash value. So now, not only is this cash value the big part of the policy, I'm adding to that to grow, paying off some of the loan, and then I'm just going to keep doing this. I'm going to rinse and repeat. And the reason I use GameStop is because it is, well, one, I believe they're going to turn this into some sort of holding company, like an early Berkshire Hathaway, or or there'll be some sort of big merger. I don't know. I think they're going to do something crazy with this. I'm not really sure if I think a crazy short squeeze will happen. I think it'll be slow and steady over 10, 15, 20 years. Like my goal is to never sell my shares. But you can do that. You can do this with any company, any stock you want. Now, what I'm also doing is getting this built out, which there's buckets of every piece of our portfolio. So the entire vault, our core holdings for me. This is GameStop, my Bitcoin, my physical silver, um, gold, things like that. And this is called infinite banking. This is my insurance policy, and then this is my active trading account, retirement, cash, some crypto, and our joint accounts. So, yeah, I mean, this was kind of a spur of the moment video here, but obviously none of this is financial advice. I am not a financial advisor. I am licensed to sell life insurance, though. So if you are interested in just even exploring how you can use this type of policy as it's a tool, obviously talk to a financial advisor, but I think it's very, very powerful tool. But all right, yeah, have a good one, guys. How do I end this?